In this presentation, we will enter deposits from our personal bank statement into our personal QuickBooks file for the month of January. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the Open Windows open. In order to open the Open Windows, you go to the View drop-down and select the Open Windows list. What we're going to go do now is take the information from our bank statement, which is going to look like this. Here's our mock bank statement. This is our personal bank statement now. So this is our personal data. We've separated our personal data from the business, and now we want to set up a personal QuickBooks file, which we have done, and enter this information from the personal bank statement to it. So to do that, we have set up the beginning balance. We found that now. And now we're going to go down and we're going to be entering the deposits. So these deposits we're going to enter into our QuickBooks file. Deposits on the personal side are going to be a little bit more tricky at times than the business side, in some cases at least. Because on the business side, we assume that pretty much all the deposits are from customers, meaning they're a result of customers and in some way income, depending on timing. But they're from customers, and therefore at some point they're the process of us generating revenue. When we look over here on the personal side, then we probably have most of our income coming from some main source, whether it be a W-2 income or whether it be our business income that we're taking out of the business and putting into our personal account. But we may have some other sources of income. We might have Social Security income for some. We might have workers' comp or something like that. We might have different types of, we may have won the lottery or something. We're getting some kind of payments after overtime at some point. And so we might have different categories of income, and we might want to track them differently. However, note that they're usually going to be income type accounts, and that's one of the challenges we have when we set up our personal account. There's not as much just systematic, this is how you do it kind of thing, no matter what software we use when we talk about our personal accounts, because the objective is a little bit different. We might have different revenue sources that we want to track in different formats. So in our case, we're going to pick a couple different types of revenue source. But note, again, most of the revenue that we get is it's going to be standardized from one or two sources. That the deposits we get typically are pretty straightforward. We don't have a lot of different areas giving us deposits usually. On the expense side, that's usually where we have a lot more diversity in terms of who we pay. Who we get money from usually comes from a lesser amount of sources, and therefore in some ways is easier to report. In our case, we're going to enter these deposits here. We've got a job, so we're going to just call that the job. We're going to have W-2 wages, and we'll start there. We have a tax refund. We'll enter a tax refund here. And then here's our big income on our side. The Amazon book royalties. That's where we really make a lot of money. We're just joking there, but we do actually have some books available on Amazon if anybody wanted to check those out. And then we've got the random rebate and the interest income, some general kind of sources that we will end up grouping. Our first item will be income from W-2 income, our standard job. So this would be from our standard paycheck job. Note that this is going to represent net pay. We're actually going to enter it in as the net pay. We'll take a look at an example later of entering in as gross pay, which would be the most proper thing to do. However, to do that, you'd have to actually look at the paycheck stub and go back through it and say, okay, how much did we really earn and how much was taken out with regard to withholdings for taxes and any health insurance, any 401k type plan. So for the simple method, then we would record here the net paycheck, and that's actually what we received at the end of the day after all the deductions were taken out. However, again, the most proper method would be to record the gross pay and then all the withholdings from it. So we'll go back to our QuickBooks file. We're going to do this by going directly into the check register. There's more of a cash method. So we're going to go into the banking dropdown. We're going to go to Use Register. And then we're going to go to the checking account that we have set up. We only have our beginning balance in there thus far. Our first transaction is going to be on 01/05/20. That's going to be the years we're working in. So it's January 5th, 2020. That's the year we're working in. Now, we're not going to put any check number for this. I'm going to call it DEP for deposit. And who did we get it from? I'm just going to call it W2 income. And obviously in practice, we would know which employer gave it to us, and we could put in the actual employer there. We're going to say tab. Now we could call it customer or other here, and there's pros and cons to either method. If we choose customer, then it's nice because we can then go into our customer list, people that would be people that typically pay us if we're a business, and we can go into the customer list and we can see those payments by customer. And then we have the other here, which is going to be used if they don't really fall into any of these categories. So for now, let's put it into actually customers, because that'll give us the ability to go back and look at these. Now, if we were to use the same file to have actual customers, meaning for business purposes and for purposes of personal, then we might want to use other, and we'll take a look at that later. But if this is just our personal side, then having anyone who pays us listed as customers may be beneficial, may make it easier for us to go back and track those payments. So we're going to say OK. And the W2 income, make sure you're on the deposit side. We want to be on the deposit side, is $3,000. Now we need to choose an account. It's always going to be an income account whenever we have a deposit, typically. We're going to want to choose some type of income. Now our question is, how do we want to group that income? If we only have one W2 employee, meaning we only work for one place, then we could just call it W2 income or something like that, income from the W2. Or if we have two places that we work at, we may want to track them separately. So we might want to list the income locations separately or not. Maybe we have two jobs that are part-time jobs and we just want to, in this system, report them all into one income account. And then we can go back and sort who gave us the money by checking out reports by customer in this case. So that's what we're going to do here. We're going to just call it W2 income and say tab and set that up. Now whenever we have a deposit, it's going to not be an expense but an income account. So you just want to make sure that you make that change. It should be an income type of account. Everything else is okay, and we'll say save and close and enter. So that'll be our first item. If we take a look at the profit and loss as we go, if we go to reports up top, company and financial, and profit and loss, and then change the date range from 01/01/20 to 12/31/20, that's January 1st to December 31st, 2020, we'll see that we have now the W2 income listed under income. Here it is a little bit larger. I changed the fonts by customizing the report up top. Okay, so then if we go back into our open windows, the checking account, and we're just going to keep going with this now. And the next one we have, I'm going to highlight that because we finished it. That's what I do when I finish stuff. And we're going to go, the next is a tax refund. Now this isn't something that normally happens, but it's one of those things where we're going to say, I don't know where to post that. Well, it's a deposit, so I'm just going to post it in a similar fashion as income now. And we could think about, well, it's really a refund and we should record it as a refund of an overpaid taxes, but we're gonna have a simplified method here and just record it as income that we got from the tax refund. We'll call it tax refund. So this is again simplified method to record this as we go. So it's gonna be 01/08 and 20, and once again it's a deposit. I'm gonna put it on the deposit side. It was 4800. I'm gonna set up a new account and I'm just gonna call it tax refund. So I typed in their tax refund income. I'm going to record it as an income account, but put it in a different group so we can see where that came from. And tab and set up. And then it's not an expense, but it's an income account because it's a deposit. So that's the only thing we got to remember. It'll always default to an expense when we use the register. Save and close and enter. We may want to put a memos, or memos are always good, but I didn't put one there. And we'll go to the profit and loss and refresh, and we'll note now that we have two income accounts. We've got the taxes and we've got the W2. So now we'll go back to the checking account and let's cross off what we've done so far. So that one has been completed, which is nice. And now we've got the Amazon book royalties where we really rake in the money. So we're going to go back over here and enter that in on the 12th. And that's going to be a deposit. And this is going to be Amazon Now you may want to differentiate the Amazon accounts so that, because there might be multiple things happening with it. You know, we might be paying Amazon, we might be getting royalties from Amazon, we might be getting royalties from different locations within Amazon. These items will be listed more specifically on the bank statement, so they'll give you a more specific type of reference, and it might be nice to differentiate between them, and that will give us make it easier to go back and track what is happening. So I'm going to call this one Amazon Book Royalties as the name of the account, rather than just Amazon, the customer in this case. So tab, we're going to set that up, and I'm going to call that a customer as well, and say okay. Note that I didn't put a customer for the tax refund. We could have. I mean, I could have put the United States Treasury in there, but I just listed it. Let me go back here for a second. Notice we just listed it here as tax refund. It would have been the name if there was a name. We might just have the deposit, but the name would be from the United States Treasury that we would get the check from. And we might be entering these as we get the check, or we might have them electronically deposited into our system. If they are electronically deposited, we typically have a pretty decent amount of detail. If we just get the check and deposit it, then we're going to have to remember what we did, make a copy of the check, make a stub, write it down somewhere, put it into the QuickBooks file as we make the deposit so that we can categorize it to the right location. Okay, so we're going to go back over here, and Amazon Book Royalties, set up as a customer, and it's going to be for 9417. And then we're going to choose an account. And again, I'm going to make a separate account for this item. I'm going to make it same as the name. Notice it's not always going to be the same as the name, the account we set up here. But for this item, I am, because I want to be able to break out very specifically on our profit and loss what type of income this is from. So I've changed the spelling slightly there. So I'm going to say tab and set that up. And this is the account type. It's going to be an income type of account. And again, remember that you may only have one income type of account. We might not be getting money from these different sources, but it's nice to break them out if we do. And then say, okay, that looks like all we need, and save and close and enter. If we go to our profit and loss and see what's happening as we go, the profit and loss refresh has now the royalties. So now we have these three. They're all income accounts, types of income. So we're going to go back to our checking account and see what else we have there. We got this one. Now, this one, like I said, we could have just some random things, right? We might have got a rebate from somewhere for $7. What are we gonna do with that? So we could track random rebates, but having $7 might not be worth setting up another account. So we might want to put this into like other income or miscellaneous income, have a dumping ground type of income account for those kind of random items that might come up. So we're going to go back over here and say, all right, that happened on the 15th. It's going to be a deposit, and it just says random, so I don't even know who the customer is. I'm not even going to bother with the customer. I'm going to put it in the deposit, $7. And then I'm just going to put it into another income account, but I want to just make a miscellaneous account. So we'll just put miscellaneous income tab. We need to put it in there because we need it to reconcile. So we're going to have it somewhere. So we're going to say set it up. And it's going to be an income type account. Again, income type of account. And save and close and enter. So there's that. Now again, note that a lot of these, I don't have the name here. That's okay because it's miscellaneous. And this name is similar to the account number, the account name. That won't always be the case in the W-2, the same thing. We might just call this, obviously, whoever we worked for, whatever company we worked for, and then call it the W-2 type income, because we might have multiple W-2 incomes we are going to put into here. However, because they're income source accounts, they may be pretty much the same. The account name and the name of the customer, not the vendor, but the customer who paid us, who gave us money, because we want to break out, there's not going to be too many of them. So in other words, I can make another account that's an income account for just about every customer that typically gives us money because there's not going to be a lot of them, as opposed to on the expense side where we pay a lot of different people and therefore can't make a separate account for every type of person that we pay. All right, next item. We're going to have the interest income. Interest income. And so we'll go back over here, and that happened on the 31st. I'm just hitting the plus to go up. And I'm just going to say this is a deposit. Now we could put the bank here, but I'm going to leave it blank again because we didn't name the bank. And just $3 in the deposit. And we're going to say that this is going to be called interest income. New account, tab, set it up. Now on the interest income, I'm going to select the drop down. You may want to put, some people will put it into other income, so it's on the bottom, not part of their normal. But really for us, it's all kind of income. So I'm just going to put it into the normal income. I'm not going to confuse things. I don't want a multi-step income statement on the personal side. I want to make things as easy to look at as possible. And so we're going to keep it in income and say save and close and enter. So then if we go to our profit and loss, now we've entered all these different types of deposits. And that's what we have. Here's our total income now for January. And next time we'll go through and we'll enter in the expenses. For more accounting information and accounting courses, visit our website at accountinginstruction.info.